The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Hello everyone, this is Teddy Kekstadt from Forex Trading Unlocked, filling in for David White for the Power Trading Hour here on TFNN.com. And we're going to talk about the major foreign currency crosses, and also we're going to start out with the dollar index to kind of give us a little idea. So the first trading day of the year, the dollar index is getting a little bit of a rebound, and as you can see back here, this first upper circle here that I have up here at this top, this was at the end of the beginning of October, and since then all the way down into the last trading of the year on New Year's Eve, the dollar index was under pressure. So if you're a wave theorist, we've made our first wave down with a little correction that we topped out back just before the end of December, and then we've started to slide ever since then. So today's little rally is most likely looking more like a corrective little profit-taking move, and it's very possible, since we're starting the new year and the new quarter, that we could get a nice little correction that's going to last a little bit more than just like a day or so. But overall, we have a bearish trend here. So just to kind of like give you an idea as far as the slope here, we have this downward trending blue line here, which is our resistance for the trend, and it's actually at a decent slope. So this is not too mild. So for the dollar index to bounce and start to go neutral to higher for the next week or even into the next month as we start the year off is not actually a big deal. The number to kind of key off is this 97.104 area, which is where this low was set. This was our first wave down, our first major wave lower move low. And trading below that definitely keeps us very bearish. Above it, it will keep us neutral up until we get into this, where this downward sloping blue line is, and only a rally above 97.833, taking out this last lower move high, where we start to be coming off the bearish train. Now, real quick, before we get into the currencies crosses, we want to look at the monthly real quick. I'm going to delete this little number sign so it's a little clearer for you. Okay, so here we have a big head and shoulders forming on the monthly basis with the dollar index. The year also settled out with a nice big slide in December, taking out all of the November gains, and that kind of sets us up once again for almost the same thing in January. So whereas in November the market had bottomed and we started to see a little bit of a correction, this is what I think you're looking at is for the dollar index will be a correction. So what is it going to be? The fundamentals are going to drive it. We're going to have the Fed, obviously, for the U.S. We have the impeachment trials that are going to be going on, the election, and also earnings driving the stock market. Those are going to be the biggest fundamental variables that probably will be playing for the dollar index as we move forward. But some of the biggest drivers also will be the British pound and the euro-US dollar. So with that being said, we're going to look at the pound first, because we have some big news going on there. Fundamentally, we have Brexit, which is now we've been talking about this now for the past few years, but at the end of January, we are going to have a Brexit. So what it means is that the UK will be separating from the EU, and they have until December of 2020 for their deadline for their trade agreements. Now, how that's going to go will be interesting. It seems like they're leaning on trying to have something like what happened between the EU and Canada. Time will tell. So here we see that the market is breaking. The rally from the British pound stopped on New Year's Eve, making this high, a really nice rally on holiday markets with thin volume. And today we've almost erased all of the New Year's Eve trade. So this little circle here, where we have this from New Year's Eve trading into today, this is where this little bounce point, this little rally, there was a buy signal that topped out pretty much on New Year's Eve. So the target was hit for that buy signal. So that's complete. The market as a whole is obviously in an uptrend, and the slopes are not too steep. But right now, for a little bit of a correction, I have these two pink little dashed lines here. So the high from New Year's Eve will be your breakout to the upside, in which case that confirms momentum for the bulls trying to pressure higher move highs. But until then, I think you're going to have a little bit of digestion from the new year, as well as starting out with what's going on with Brexit. Now remember, The other currency crosses may start to trend and swing around because we have a January deadline for Brexit. The British pound may start to settle into a range trade. So we have this first little pink pivot here at $1.3040. This would be, I think, where you start to see a lot of buying coming in and a lot of support. If the market fails here, then it would be this $29.01 area, which would be the low set right over here. Any failure from here then definitely has us on a neutral to bearish stance for the pound US dollar as far as a longer term outlook. Now, if we get a correction, it starts to bounce around here, we could really, like I said, going into the month of end of January, we might see sideways trading. So the dollar index, that's why we looked at it first. If you start to see the dollar index go back towards its lows and start to hit lower lows again, then you're going to probably see the pound US dollar most likely start to lean on this upper pivot of $1.3283, making higher move highs, which then will target this last higher move high on a more intraday longer scale. So the main thing to remember, though, is that with the British pound US dollar, obviously there is the trade deals that have to be hashed out, but Brexit is happening in January, although we still will be talking about it for a much longer time frame. The rally here, though, where the dollar index topped out in October, the British pound US dollar, it bottomed out back here in September already, and then it led the charge for a big part of the dollar index move. So the strength in the pound is something also to be very aware of, because if the pound US dollar continues to rally, and the pound being one of the biggest weights in the dollar index, that probably would give a lot of momentum to more selling pressure in the dollar index, and also give a little bit of a lift to some of the other currency crosses. So now, since we're talking about Brexit, we have to then go to our Euro US dollar currency, which has been doing actually a kind of a good rallying mode for the last, as you can see, holiday market here. The rally actually happened 3 sessions ago. This is one of the biggest moves the Euro US dollar has had in the course of 2019 as a whole, period. The volatility for Euro US dollar has been very tight. You're looking at mostly a 50 to maybe 70 pip range. The days of having $1.50 point, upwards of 2-point dollar moves in the course of 24 hours or 48 hours has been very, very slight. Now today, this here, we have a really big sell signal setting up right now. So I have these 2 little circles drawn in as some longer term downside target range. Now overall, this market is a bull. We have the market here that had bottomed over here, and then we had this higher move low, and then continuing of higher move highs, higher move lows, and as of New Year's Eve, we had this last higher move high. Now we have profit taking that's going on right now. I think that the fact that the Euro US dollar is retracing is not necessarily any reason to get on the bearish bandwagon. I think it's more profit taking and adjustment. And also you have to remember that the Euro US dollar, unlike most of the currencies over the course of the past year, it really hasn't trended. It's been in basically a $6 range for 12 months. And now it's looking like it wants to start to pressure resistance more and more. So the slope you had from the past, month and a half has been at a fairly decent slope. It's not overly steep, which gives it a much easier chance of maintaining the trend. We have higher move highs and higher move lows, and we ended the year also with a lot of positive news as far as how the whole EU is doing. So, but remember, the Brexit issue is going to also probably put a lot of strain on getting movement going for the Euro US dollar also. So if this market starts to correct over the next few days and maybe starts to bounce right around where this circle is here, around the 111 to a 111.25 area, that would be a nice little spot to get.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, everyone. I'm back with the for the Power Trading Hour here. We left off with talking about today's trading. We're looking at the Euro-US dollar, and right now, obviously, you can see that it is hanging on its lows, and we're targeting this little circle here on this upward sloping support line. Now, if you're a bear, for sure, you got to be careful because we are in an overall bull market, a bull trend that started at the beginning of October, and definitely through our holiday trade showed that it was definitely wanted to give us a little sign at the end of the year that they're not going out peacefully. So I would key off of New Year's Eve's high up here at a 112.39 if you're a bear. And if you're a bull, as far as I think what's going on right now, it's a profit-taking slide and wouldn't be really too overly zealous as far as selling. And like I said, I would be very cautious as a bear. Now, the market right now is trading right below this 111.80 pivot line where we have this up and down arrows right here. This is pretty much a really big pivot as far as support and resistance for the Euro-US dollar. It's been trading in a very tight range for the past year to begin with, and when it's been below 112, that's $1.12 rather, it's typically been on a bearish slide that usually goes no further than about $1.10 down to about $1.08. So we've already gone through our bottoming period, and the market's been in a sideways basically market now for over a year. So the volatility factor is very, very low. So as far as expectations for especially being a bear right now, considering the trend right now, we've been making higher move highs and higher move lows. Right now, you have to view it only as a corrective phase. Only if we take out this first upward sloping blue line, which is not that steep of a slope. It's pretty much a 45, which is a fantastic trend line overall. As far as trends, this last higher move low around $1.1067. This would be the first time level pivot where you can really say that the market's going to become bearish or neutral to bearish. Any trading above here keeps this bull trend intact and is more likely to set up just a corrective slide. So be very cautious if you're a bear. And then definitely as far as the high from New Year's Eve, I would say that this would be your key pivot. Now, I drew this dark line here. This is when Brexit comes into fruition finally on January 31st. On this date, the UK finally, the Brexit will occur, and that's when the whole trading thing starts to become an issue. So things will actually not really be any different when this day occurs. It's not going to be like Y2K panic or anything like that. So, but it does mean that there is only an 11-month deadline then for the trade balance, trade agreements to be hashed out. And like I said, Boris Johnson seems to be leaning towards trying to have a deal like the EU has with Canada, which is very easier said than done, because that deal actually took 7 years. So could you imagine if it's still, we have another 5, 6, or 7 years of them trying to figure out a trade deal between the UK? So the euro is going to be impacted by that as well. But like I said, until this date right here, it's very likely we start to see a sideways pattern. So with the volatility here, we may stay right below this high that was set on New Year's Eve, and we may stay above this low here at $10.67. Remember that this market's been trading in basically 50 pip ranges on a daily basis. There's not much to go with that. So let's stay in the European trading zone and look at the US dollar Swiss. Now this one, like we looked at the dollar index when we started the show off, this chart looks a lot like the dollar index, especially over the month of December. And this is one of the currencies where you have to kind of use as a gauge for whether the dollar index is truly going to trend the way it's going, and also how the other currency crosses are going. So right now we have the dollar index, which is getting a little bounce today. Now you saw that in the euro, it's coming back nicely, and it's retracing most of the New Year's Eve gains. The pound is falling back. The Swiss, now this is the one that's had the most volatility. Up here, the market was trading above par just before December, and now came all the way down into New Year's Eve and touched down below 96.5. That's a very big slide for the US dollar Swiss, because considering that the pound and the euro, which are the bigger currencies in Europe, did not have that extreme of a move. So with that being said, we have this nice rally going on here. I think this is a big corrective rally. This is a very, very steep trend going down on an intraday basis. So even if the US dollar was getting hammered, the US dollar Swiss is set up to have some sort of correction going on. Now, not that this is going to set a bottom and all of a sudden we're going to see a run back towards parity up here. I think that this last lower move high, where it failed at parity and now we've had this steep of a decline, is a very good indication that this is probably the first wave down for an extended slide for the US dollar Swiss. And that would coincide with the dollar index. Remember, if our sell signal from October is confirmed and we do have a head and shoulders in the monthly basis forming, the US dollar Swiss would be one of the markets that is much reflective of the dollar index as any of the currency crosses. So meaning that while the US dollar is being sold, the US dollar Swiss is going to be the most extreme, because the euro and the pound, remember, they have Brexit issues, and there's no real reason for them on a fundamental or technical basis to really start to trend excessively to the upside. And I mean, they're already in a bull market, so they're set up for a neutral to higher trade, not necessarily forming a bear market. So the US dollar Swiss, I think, as long as you look at the dollar index, follow that, that's probably where you're going to see this market going. Set up for a correction to probably come back up to this 98-cent level, maybe even back up to 98.5, especially if the dollar index can do what it did in the beginning of December, or excuse me, in the beginning of November, and get that nice little correction going for like a week and a half. All of a sudden the dollar bulls come in, and then it's just going to be a trap before all of a sudden at least there's another test of support. I don't think you're going to have, especially considering the fundamentals that are going on with the US dollar, that you're going to be able to get enough strength going to get any true rally going on in a market such as the US dollar Swiss. Now, another good market that you can look at would be the US dollar Canada. The US dollar Canada market right here is also in a very, very steep decline right here, as you can see. So this one here, look at how this is. It had a higher move highs earlier today. It was strong. And look at it, it's only slightly positive on the day. So the US dollar, even though it is gaining strength, you can see that early morning, it was like almost like the first trading day of the year, all the dollar bears were taking profits. So maybe they were on vacation and had their orders to get out, I don't know. So volume is starting to kick back up, and there definitely is business being done. But this is also a telltale sign that, like I said, with the US dollar index that it is really bearish right now, and most likely we're setting ourselves up for a little corrective rally. But we do have a nice little signal here. So we're already we're in the mid-afternoon for the Forex market trading, and in a couple hours we're going to have the rollover close. So let's say we have a positive close here for the US dollar Canada. If the dollar index is in a retracement type of mode and is going to get a little bullish over the next week to week and a half, we should see a bounce here just like in the Swiss and see maybe a challenge back of this pivot here around $1.30.40 and come up towards this downward sloping blue line. So over the next few sessions, it's very likely that we could get a challenge of that, especially, like I said, if we have a positive close today, and then if we have follow through with a positive close tomorrow on Friday, that would actually set us up for a buy signal that would give us the lead up for the week ahead next week for the first full trading week of January, excuse me. So we have some potential for some signals shaping up. Remember, with the dollar index, like we said, if it bounced today and is setting a short-term low at least for a correction, that gives us an idea of a little turn in some of these other major currency crosses. So that would be it. And I think we have to go into commercial here. I'm not sure about the time. There we go.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello, everyone. All right, we left off with talking about the U.S. dollar Canada and how today's trading. We have a nice positive day going, although it fell off the highs pretty good. It's positive, but not quite that extreme for the day. So we'll see how today ends. We have a couple more hours, and one thing to look for is a positive close today would then mean a harami buy. That's a relatively weak 2-day signal, meaning how the market had been trending like it did into New Year's Eve. Today, with this little small positive day, that would be what, like I said, called a harami, which means a short-term change in trend would be the most likely scenario to be setting up. And if we settle positive today, and then if we settle positive tomorrow, just a little bit or even a lot, then that would be called a 3 inside up buy pattern, which is another Japanese candlestick pattern. And that would have us set up for challenging definitely this $30.40 pivot, which I was telling you about, that kind of keeps us in the bearish mode for the U.S. dollar Canada. And any breach of this level will definitely have us leaning towards this $30.99 area, looking for the top for a retracement. Now, does that mean that the U.S. dollar Canada is going to all of a sudden become a bull? Not necessarily, but it does have a very good chance at, like I said, challenging this $30.40 area and $30.99 over the next few sessions to a week. Now, this downward sloping blue line, it comes into this. This could give it a little trouble if the bulls start to try and challenge this area. However, if the dollar index is rallying and back into a corrective mode, that would definitely take an edge off of this U.S. dollar Canada break that we've been looking at over the month of December. This slide really mimics a lot of what was going on in the dollar index, and so I think you have to kind of be mindful of that and see what shapes up over the next couple days. But definitely a positive close today, a positive close tomorrow definitely probably puts us off the bearish campaign for a little while. The low from New Year's Eve right here, this would be for your bulls if you're looking into buying into this little scenario. If it does happen over the next few sessions, that would be your risk level. Any trading below there would be indicative of lower move lows and obviously a bear trend being continued. Now we have this pivot point at $31.70. This would be the area where I think that you're going to really have an exhaustion of any type of bullish retracement. Remember, the dollar index, if it is only in a retracement mode, then obviously if it turns, then the U.S. dollar Canada would probably be under pressure as well should the bears return to that dollar index. And that also means that you're probably not going to be able to have the momentum to get the market back up to above this $31.70 level, where you have a lot of it's where you have a lot of support and resistance to begin with historically. So another good trade following the dollar index. Now we're going to move over to the Japanese yen and see what's going on here. Okay, so we have a long-term trend right here that's been going on since before September. That's been rallying here, the U.S. dollar yen. And then we have this other trend here that's from this major low through this last major low here that was tested over the past few sessions. Then this is what worries me right here. The U.S. dollar yen right now, here we are on January 2nd, and it was positive earlier today, but it came down and it took a test of this $8.24 area. The U.S. dollar index is strong, and so that's kind of like you would think that as the other currencies are breaking, that this is what should happen with the U.S. dollar yen. The thing is that the U.S. dollar yen hasn't been going in the same direction as the other currencies. This is the one currency cross where, while the dollar index was under pressure, it was able to sustain momentum to the upside versus the yen. Now, because we have the trade deal with China that's supposedly going to be signed on the 15th, the U.S. dollar yen is going to probably be acting a little bit differently than the rest of the major currency crosses. It's not going to run with the herd, most likely because of the terms of what's going to go on with China and the United States. Once we have clarity, it's good for all of Asia, but then it also puts things to rest as far as with Japan and a lot of the other countries as far as the difficulties that the U.S. and China have been dealing with over the past year and a half. Does it mean that it's over? I don't know exactly what the terms are going to be and still has to be signed, but I think that just like you have the Brexit scenario that could dry up volatility a bit for the euro and the British pound versus the dollar especially, or versus themselves like the euro pound cross, I think the Japanese yen, especially versus the dollar, is going to start to continue staying in this range. Like if you look at it over the course of basically the middle of October up until now, the market's been trading basically where it's at now, right around $8.55. So this is really there's nothing to really look at here. You can't kind of try and make something happen here. As far as what we do know technically, the market did try and get above this, make new higher move highs, and it failed to. So it made a lower move high, but not that much. So it's kind of bearish in a technical sense. And it did just, especially today, hammer in a lower move low. So it's by wave theory, is definitely bearish, but it's more of a sideways bearishness than it is overall negative, the U.S. dollar yen, especially because if the dollar index is going to be retracing, it's going to be very hard for the U.S. dollar yen to force a slide right now. So I'd be very leery of being bearish the U.S. dollar Japanese yen currency cross right now. Obviously, we've taken out these support lines that have been in existence for months on end. So we do have the inklings of a bear. But like I said, I wouldn't be overzealous because there's too many fundamental variables that are coming into place right now, and no reason to start selling the dollar versus the Japanese yen, especially if we get a rally in the dollar index. Now, also in this trading zone, and this is why I think you have to be mindful of the Japanese yen, is the fact that we have the Australian dollar, US dollar. Now look at this rally. This market has started to show some light over the course of the month of December. Like the other currency crosses, today it is selling off in a big way. It's taken out all the gains from New Year's Eve and pretty much the day before. Now this is actually a nice little trade setting up here. So for your bears, if you're looking for a little bearish trade here, if we get a negative close today, that would have this market right here, the Australian dollar, US dollar, in a bearish stance and targeting lower levels. So that would have this high from New Year's Eve being your threshold for your pivot for a bullish breakout or to sell against if you're a bear. So if you're trading the Forex outright in the Forex derivatives, or if you're trading the futures or the options, this would be a nice little play for either credit spreads above the market to sell or to look to layer out different strikes around the high to where the market is going to settle at today, if it settles especially right around where it's at. This would also be a bearish engulfing line. Let's say the market, the Australian dollar, US dollar settles today right where it's at, that for sure would be a confirmed sell signal, and that would target a break that kind of would make a test for where this last higher move high was. Now remember, this market has been rallying very nice since October on a relatively decent slope, nothing extreme. The extreme slope came in the month of December, and especially the last couple of weeks with this accelerated breakout of these highs. So for the market to go sideways to lower for the next couple of weeks or a week and a half to take a little bit of profits off the table from the bullish move is very normal for the market to do. Only if it fails this first upward sloping blue line does that have us kind of targeting this 68.35 lower pivot. And I think that it's the odds of you getting down here right now, unless you have a big rally in the US dollar index, especially versus the other currencies, I don't think you're going to see that big of a correction in the Australian dollar, US dollar. Momentum just doesn't seem to have the ability to get that far. But we'll see what happens. Just remember to key off this high. Any trading above the high set on New Year's Eve, I would be very leery and mindful of.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, everybody, we left off with the Australian dollar, US dollar sell signal. And on the chat, we had Mr. Bill asking a question about the US dollar Canada. So I want to go and jump back to the US dollar Canada real quick. And he asked something, let's see, Larry's 3 drives to a bottom, just thinking. So 3 drives to a bottom. So I don't know, let's see. In other words, if you're looking for yet another test of support, oh, absolutely. I don't think that this is necessarily the bottom period. I think that this right now is a short-term buy signal, just like how we have the sell signal in the Australian dollar, US dollar. And this is where some of these signals actually coincide with each other, where when multiple currencies give you 1, 2, and 3 day signals that all line up at the same point, that usually gives you a good indication about what's going to happen with the dollar. That's why I think the dollar index right now, even though it's been under pressure, it's not just a New Year's rally that's starting. I think it's just a New Year's correction that you're going to see in the dollar, meaning dollar strength for the next probably 3 to 8 sessions. And here's the reason why. We have Mr. Bill here looking for still definitely some lower move lows in the US dollar Canada, or at least a test of support before it bottoms. Very possible. Markets don't just end on a dime. So, and especially since there's no real reason to get bullish to US dollar Canada, and the overall trend has been bearish. However, a correction, if you're looking for one, if you're an aggressive bull, that's the scenario to look at. Before you're looking for a major trend move, you need to have a correction at least to start to show you have some momentum to the upside. So with a positive close today in the US, like I said, the US dollar Canada, and especially if it gets a positive close tomorrow, I think you're going to get a little retracement. And then, like I said, watch the dollar index. If the dollar index takes a turn in about a week and a half, and then starts going back to new move lows, I think the US dollar Canada will make newer move lows, Mr. Bill. Okay, now we got Bodie with EURNZD doing a trend chain. Okay, well, we got the good lead up then, because New Zealand dollar, US dollar was the next currency I wanted to talk about. So that is doing the same thing. Now, this market has been a raging bull, and this was the one currency before coming in today that I was like, okay, I won't have to give anybody any advice on this one except for don't try and fight this trend. then today had to happen. We have New Year's Day, and we have a big bearish engulfing signal in the New Zealand dollar, US dollar. So now we may be setting ourselves up for a correction. So the high from New Year's in the New Zealand dollar, US dollar, I think is where you use as your risk right now. If you're a bull and you're looking to take profits, now would probably be a good time today, or especially if we settle lower. Now, we haven't settled yet. We got to wait for the close of today, so don't jump the gun. All of a sudden, we have a rally in 2 hours and make new highs. And you're like Teddy called for this big break. So, all right, so we have the New Zealand dollar, US dollar right here with a potential sell signal. And then the nice thing is here, I'd already had these little pivots down here. We have these upward sloping blue lines, which already give you a little line or target for where the market can break down to. But realistically, I think this 65.38 to 64.71, these is really the extreme, the support band where you'd see the market correct back to. Because unlike the other currency crosses, the New Zealand dollar, US dollar, it's almost irrelevant what the dollar index is doing. This thing is a bull. This thing's been raging since the beginning of October. It bottomed nicely, and no matter what the dollar index has done and the other currencies have done with or against the dollar, excuse me, this currency has just been a bull. So I think right now, watch the close today, bearish engulfing sell signal, and then bam, then we get a nice little correction, and maybe takes a test of this last higher move high, or maybe even this higher move low here. But I think this first pink pivot here at 65.38 is the extreme. So now Bodie wanted to know about the EURNZD. So that's a good question to ask, because we know that the New Zealand dollar seems to not care about the US dollar whatsoever as far as strength. So why would it care about the euro? So okay, so let's see. What are you doing? A trend change? Actually, I don't think the euro New Zealand dollar is going to get a trend change, unless you see maybe, like I said, with the if the sell signal does work in the New Zealand dollar, US dollar, for a short time, I think you could get a little retracement, especially if the euro is also not retracing so much against the dollar, meaning euro strength is meaning a neutral trade because of Brexit. So I think for the euro New Zealand dollar, it's going to be hard to get a very big rally here, but you might see a little bit of a correction. So you have this trend that's been going on since the middle of October. So let's try and figure something out for Bodie. We'll do this live for you folks. All right, see, nothing but the best for you guys for the power trading hour. All right, the slope overall for this trend since October, it's almost a 45. So for Gann theorists and even just trend trades as a whole, we have a series of lower move highs, lower move lows. It's been very consistent without any type of disruptance, even trying to cause a neutral trade. So I wouldn't try and catch a falling knife here, my friend. Is it bottoming? Very likely it could be. New Zealand dollar strength, I think, is what you have to really look at. And like I said, if it wasn't for the short-term sell signal in the New Zealand dollar, US dollar shaping up today, I would say don't even look to sell that market. Maybe take profits, but don't even look to sell it for a while until you get a sell signal. Of course, today we seem to be getting the sell signal I didn't think even expect would occur today. But like I said, it's lining up with other currencies. So we have 1- and 2-day signals and even 3-day signals that will be confirmed today as of the close in some of our major currency crosses that would coincide with these brand new 1-day signals, which leads credence to the fact that we're probably going to see a dollar rally for the next few sessions to upwards of a week and a half. And then I think you'll see a turn again and the major overall trends resume with the dollar index being under pressure now. But like I said, this euro New Zealand dollar, not quite sure about that. So let's go over the trades of the day here for you, because we got only a couple minutes left. So we'll go back to Australian dollar, US dollar. So as a reminder, bearish engulfing sell signal here shaping up. And when we after the break, we have one more little snippet. I'll give you some ideas on how to figure out how to work these trades. So of the currency crosses we've looked at today, this is the one that we are looking for a potential trade at the close of today for tomorrow. So that is the Australian dollar, US dollar with a bearish engulfing line set up. We looked at the US dollar yen. We didn't have anything there, but we did have the US dollar Canadian dollar. This is another one where we have a potential buy signal shaping up, and especially if we get a rally tomorrow confirming positive momentum shift here, then we have a good setup where over the next week and a half, we get a nice little rally in the US dollar Canada, and also, like I said, follow that US dollar Canadian dollar also as well. So now we have two markets that we have trades that are setting up, the Australian dollar US dollar and the US dollar Canada. A couple of our lesser major currency crosses, not usually the ones that I'm too focused on. I usually am more of a euro and pound trader and yen trader. But it doesn't matter. You want to go where the opportunities are. So like I said, we have these counter trend signals, so don't expect very much. We're not looking for major turns in the market. Overall, we're going against the trend, so we're just looking for corrective moves right now in these markets. So we had the US dollar Canada, then we had the British pound US dollar. Now remember, the British pound and the euro, because of the Brexit situations, volatility may not be that extreme. So we do have a slide in the British pound today. Those other markets are showing some signals. This one is not. So I would be very careful right now about even thinking about fading this rally that's going on in the pound. If you're not already a bull and you took profits, or if you're still in it and you're just keeping your stops tight, then I would say, that's not a bad place to be. Okay, I think we're getting ready for a break soon, so we're going to pop over to our next currency after the break. So, okay, let's see in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hello, everybody. We're back now. Just want to recap what we've talked about this hour. We have a couple of trading signals for you. We have the potential buy signal start shaping up in the U.S. dollar Canadian currency cross. We have the potential sell signal in the Australian dollar U.S. dollar currency cross, and we definitely have a sell signal shaping up here in the euro-US dollar currency cross as well, with the bearish engulfing line, which we had discussed earlier. And if you want to learn how to trade these patterns, you can read the book High Probable Japanese Candlestick Patterns. It's available on Amazon in Kindle and paperback version, written by myself, and it'll show you how to use these patterns in both the Forex futures, options markets, and all kinds of even equity ETF markets and stuff to set up correlative trades. So these are patterns that don't happen very often, but when they do, they definitely give you very good probable opportunities to exercise many different markets, types of positions. So we definitely have to wait until the close. We have another hour and a half, 2 hours before the currencies roll. You don't want to ever jump in front of a trade because we can't predict the future, and especially if you're looking for a signal, it's not a signal until it's actually confirmed, which doesn't happen until the close. So definitely be mindful of that. And anytime you want to find out what I'm looking at as far as these signals, you can check us out at www.forex-trading-unlock.com, and always on YouTube too. If you want to look for our content, we'll be definitely having some of these, since these signals are shaping up, I'll be having some video episodes on our YouTube channel, which you just search Forex Trading Unlocked on YouTube and subscribe, and then you'll find out anytime we have a little news about these signals or our analysis on the Forex markets as well. So I don't think we have any questions. Nice, Ted. Oh, thanks, Bodie. Appreciate it. I'm glad you liked the analysis today and looking at the New Zealand dollar euro market. So, which is pretty funny because that was the perfect timing when you came out on that. Thank you very much, guys. You have a great day.